lot easier to just be first.
Sell it all today.
Is that even possible, Sam?
Yes, but at what cost?
I'll have to pay.
Really?
I think so. Where is this going to come back to us?
Everywhere.
Sam, I don't think you seem to understand what your boy here has just said. If I made you, how would you do this?
Well, you call the traders in for the normal 6:30 meeting and you be honest with them, because they're going to know it's the end either way. So you're going to have to throw them a bone, and a pretty big one. And then you've got to come out of the gate storming. No swaps, no nothing. 40% done by 10:15. By 11 o'clock, all your trades have to be gone, because by lunchtime, word's going to be out. And by 2 o'clock, you're going to be selling at 65 cents on the dollar if you're lucky. And then the feds are going to be in here up your ass trying to slow you down.
Ramesh?
They can slow you down. They can't stop you. It's yours to sell.
Yeah, but John, even if we manage to pull that off, and that's saying something, the real question is, who are we selling this to?
Same people we've been selling it to for the last 2 years, and whoever else will buy it.
But John, if you do this, you will kill the market for years. It's over. And you're selling something that you know has no value.
We are selling to willing buyers at the current fair market price, so that we may survive.
You will never sell anything to any of those people ever again.
I understand.
Do you?
Do you? This is it! I'm telling you, this is it!
What is going on, YouTube? It's Brendan from Market Makers. I hope everybody's having a fantastic weekend. It is Monday, I do believe. Yes, it is. But it is a market holiday. Futures is going on, but not a lot of volume. But I want to get this video out because I want to show you a wave analysis on the S&P to predict where we could actually top out at if we didn't just hit a key level, because we did. And I traded it. And I want to show you guys how I broke it down in the larger time frame and the smaller time frame. We're going to focus on Bitcoin finally moving off the mat and really focus on Tesla, and I'll cover a couple of the other indices very briefly, okay? But these are the things that I'm watching the closest, what you're going to see in this video. You guys like this channel, you want to support this channel, like and subscribe, and please do consider checking out our Discord to hang out with 13,000 other like-minded financial freedom-seeking individuals. And guys, we have other professional traders on staff. They trade long, they trade short, we do scalps. Multiple methods are in our room. Elliott Wave traders, all types of things. It has something for everybody, with over 40 countries now represented in our room. And you can check it out for free. Check out BingX or SimpleFX. The details, the bonuses, all the good stuff, double bonus on SimpleFX is all in the video description. Download it. Contact Lee in our Telegram. It's the only way to contact them. There's no WhatsApp. Don't respond to the spam and the comments, but it's all in the video description. Contact Lee. He'll get you set up in the room for free. And after you guys get in the room, you get a half dozen of our custom-made indicators to keep for life as well for free. So let's go ahead and jump into this. DXY, guys. DXY catching a little bit of a rebound. This is our previous trend-based fib. We had the target up here at 105.851 for the geometric reciprocal move. But now that we fell below the 618, but now that we have this double bottom, this traditional Gartley pattern forming, right? Traditional Gartley pattern forming. I want to look at a geometric target here for this. So if this ends up holding up, we have to see if this holds up, because this could come right back down on a heavy volume day like tomorrow. But if this holds up as a bottom here, then we're looking at almost the exact same projection, the one fib at 105.917. Now, when the market starts to crater, and that was margin call in the beginning, because everybody always asks me what clips we play, but that was margin call in the beginning. I want to show you that because that was, I worked at Merrill Lynch in the great financial crisis times, okay? And that's going to be the Minsky moment coming in this market. That's why I want to focus on how close we are to a really strong resistance level for a potential top on the S&P if we're not already there. But you're going to have that Minsky moment. That will be coming to a boardroom near you. And what I thought was great in that clip is when he said, who's going to buy this? And he says the same people have been buying it the last 2 years. This reminds me so much of crypto. This reminds me so much of this market environment now, which reminds me of the GFC, because buy the dip mentality now, the BTFD mentality is super strong. And so many people bought crypto in the 30s, 40s, 50s, and 60s because so many morons out there in the TA space had the 200K videos, 250K videos, 500K videos, Bitcoin to a million within 2 years. Bitcoin will never drop below 30,000 in my lifetime. And they all got stuck. And Bitcoin's going to pull down to our targets, high 12s, low 13s. We're going to focus on that as well when the next drawdown comes, guys. Deutsche Bank put out an article that near a 100% chance of a recession, a hard landing, as they call it in the media. I'm bringing that up because the narrative now is a soft landing is more plausible. People are messaging me about Tom Lee from CNBC, can never be correct. Tom Lee out there saying we're in an expansionary environment and not a potential recessionary environment. Guys, I want to just want to relay this to you, okay? Let's just look at the S&P real quick. I want to bounce over to this just to show you this. Tom Lee in December of 2021, so over here, he said a new all-time high was coming for 2022. In January of 2022, he said this is a generational buying opportunity to get in the S&P, and then the S&P fell almost 27%. People are so forgiving of the bulls. It's unbelievable because I got out of this market in November, December. People that know are in the Discord, I got out of this market in November, December 2021, 7-year cycle, the Shemitah, a bunch of different reasons, the topping patterns that we had, and it saved myself from a 26, 27% decline in the market. And I've just been trading since. So be careful who you follow and who you talk to, because if you look at the past series of recessions, all 12 that had the same exact premise set up as we do now with the leading economic indicators in recession territory, yield curve inversion the way it is, and our yield curve inversion and leading economic indicators are worse now than in previous recessions, okay? But if you look at the same setup and you look at the probabilities, all 12 ended in a recession when the indicators were set up this way. That means this 13th outcome has a 97% probability, a 97% chance of being a recession. So when you hear people talk about a soft landing, statistically, you're at less than a 3% chance of that happening. If that's how you want to gamble your money, that's okay. I'm going to go with the 97% because I've seen this before. I saw this in .com. I saw this in 08. .com recession wasn't even bad, and the market still dropped 50%, the NASDAQ 84%. Okay, so this will get to a target and it will retrace. Let's jump back. I have ADD sometimes. Looking at the DXY, so I'm looking for this. If it does build strength when the market sells off, looking for a rally in the DXY as people literally, quite literally in the US and around the world cash out, okay? And those targets, you'd be looking at 104 where you got this resistance before, 105, and then almost 106 at the 1 fib. And of course, the VIX is low, about 13.54, below your pre-pandemic low when you spiked up to 85. Now, what we wanted to do here on the S&P after going all over the place, I want to look at waves, okay? I want to do a wave analysis. Now, Robert Fisher, my mentor for Fibonacci, wrote 4 books. He ran a hedge fund in Switzerland, wrote most of those books in the mid-90s, early 2000s with him and his PhD brother. Fantastic book. It is a heavy reading book, but it is the method that I trade fibs with, and a lot of things he does, sequencing, wave analysis, things like that, I all learned from Robert Fisher, okay? You can find his books on Amazon. I talk about him frequently in the Discord and show methods for how I use Fibonacci. But looking at a wave analysis, we want to look at this move up, okay? 19% wave here. So this is after our downfall, 19% wave. What's the next wave? It's going to be another 19% or 18.69. And then the waves got smaller. So let's look at this. This is 11.45. And then off this base up to the current peak, which could go up. This is what we want to determine. Where is this going to go? 16.95. So you have a 17% move, 11.5%, and basically 2 19% moves. If you take the geometric mean from these 3 prior waves, you come out with 18.82. So let's open this up. because I think that lands you, let's just call it, I think it's 45.25 on the coordinates, a little bit less than that, like 45.23, but for easy math, let's just do 45.25. Get it up there, 18.86. Okay, so 45.25. So this is the potential top here for this impulse wave. Just looking at the previous waves, taking the geometric mean, not the arithmetic mean. Geometric mean is better for cycles of growth and decay. And so that's kind of my top where we could get to 45, let's call it 4,500 to 45.50, okay? And we got to 44.52. So we have another 50 to 100 points we could run, or we could be topping out. And why do I say we could be topping out? Let me show you a couple of things here on the 3-day chart of the S&P. On the 3-day chart. So looking at the S&P, guys, just using our geometric Gartley pattern here, 44.15. This is why we shorted up here. I'll show you this on the 1-hour chart in the room. I posted a short. We got a drop now to below 44.15, all the way down to almost 4,400 already since I posted that short, okay? But this is an area that's going to provide strong resistance. If we overflow this area, I'll be looking at that 4,500 to 45.50. But we have a lot to talk about or see happen in the marketplace before that occurs. Key inflection point. Now, if I want to do a simple fib projection as well, this is simple on this breakout here off of our low, market low. Here's our breakout. Let's do a fib projection going backwards here. That gives you the 1618 at 45.44 within that 4,500 to 45.50 range. Again, so this is my market topping range. Guys, this is important to understand about the idea of a recession coming, because the one key, you see people cherry pick data all the time. Well, whenever tech leads and does this, then the other market will come and all this up. Great. But the one key piece of information that everybody leaves out, and you have history going back to World War II to see this, the market has never bottomed one single time ahead of a recession in its history. The market has never bottomed one single time in history when the Fed was actively raising rates. They just paused this month. They were actively raising rates since the October bottom. So this would have to be the first time in history you have a market bottom before recession, and the first time in history the market bottom before the Fed raised rates, okay? So again, probabilities is so important to understand. You have a rally, a strong rally in the S&P that is going on right now, a 27% rally off the October low. 27%. It's not a small rally. It's a very strong rally, matching essentially your decline. So you have this 27% rally, but is it a bear market rally? You hear people say it's over 20%, so it is a bull market. It's just a bear market rally. In the 1970s, we had 260+% rallies. We had 4 of these in the S&P and .com, 20% plus rallies. We had 6 in the NASDAQ. This is not uncommon. And you start putting confluences together like our volume analysis, 58 bars here to the peak, back to this trough. So I did 58 bars from the all-time high backwards. You are 60% less volume. 20.72 million, 8.192 million. 60% less volume on this run up. And again, expressing this, you can see this expressed in volume waves. Look at this volume wave on that bull run to get you up towards that all-time high. Look at the volume wave off this low. Couple of decent waves, smaller, 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 smaller. It's a lot less volume, guys. Low volume rallies build tops. They will fail. Price can move up, but they will fail. In the 3-day chart, you don't get overbought very often on the MFI, if ever, not in the last few years anyways, but you're approaching that range where you have trend exhaustion here on the MFI. Let's go ahead and move forward. I got Bitcoin coming up next. We hit our pivot day. What does this mean, the pivot day? This is our pivot pattern, guys. Here's our pivot, June 14th. This would be the inverse of your bottom from June 16th, right? So this is your pivot day. You hit your pivot, and the next bar dropped, and now we have a Wyckoff structure forming here in the daily time frame. And if you look at our pivots, just a quick recap. Lots of people are doing this on YouTube now with various bars, 43 to 44 bars. But this pivot, and we've had this for months, guys. There's your base. There's your top to the candle. Look at that base to the candle, top to the candle. And then we got more complex, what I would call Wyckoff structures forming. Got a top here within $20 or $30 of the high, 9% decline that we traded in the room. I shared that on YouTube. And then, of course, we hit our pivot, got a little bit higher high. And I think you're going to be building your structure here. If we have the impulse up, watch 4,500 to 4,550 to build the top. But this signals a change in trend is coming, just like we had here. We had the pivot, had a couple 100 bar drawdown, 140 bar drawdown, and then the pivot to the upside. So this just tells you a change in trend is coming. You had an up move, which turned into a sideways Wyckoff accumulation move, and now you had an impulse up. So this could turn into a Wyckoff distribution top where you start to see your breakdown from here or slightly higher. Let's look at one more chart here on the S&P before I zoom into the trade. One other thing of note here on the Keltner channel, the Keltner channel uses volatility, okay? ATRs is measuring ATR. Lots of people use standard deviations and Bollinger Bands. I prefer volatility, especially from trading Forex for so long. But we broke the Keltner channel here on the daily for the first time since September of 22, okay? So this is the first time we broke it. We broke it to the upside. Now, what you typically have, whether you're trading Bollinger Bands or Keltner channels, is when you have a break, 95% of all price action occurs within the bands, okay? Within the bands. And so when you typically have a break, at some point you get mean reversion. In this case, on the Keltner, it's my 21 EMA, but you get mean reversion. This would land you back to 42.76. Doesn't have to happen here. You could have this stick to the upper channel, get to that 45.50 range, and then start topping out and then come down, okay? But that's typically what you get. And then you could end up retesting the base of the Keltner, which would bring you back down to 41.66. So it's just something else to watch. Now, what else is interesting here, because these are the defined ranges that I'm looking at, what else is interesting is the MFI on the daily. The first time you have hit trend exhaustion area since the all-time high, on the run up to the all-time high back in 2021. Late 2021, you topped out January 4th. So this is the first time you hit it. So I want to see this start to roll, start to flatten out like this, because the MFI will often lead price since it is a volume weighted RSI. Volume leads price. Okay, it's a live action indicator. Looking at the momentum is still strong, but you have your acceleration turning red now, so it's turning down a little bit. So this is what I'm looking at on the daily, and this is why, because we completed my pattern here, my geometric Gartley at 44.15, which is why I'm focusing on this corridor to see if we can hold it or move back up. You look at this on the 1 hour. Posted the trade up here, guys. I want to show you. We have our 5 and 21. I have trend trading videos that we posted. All the education stuff on our Discord's free, guys. We don't do this charge $3,000, $5,000, get our indicators, all that stuff. It's all just part of being a member. You get to enjoy it. We're constantly adding new material. We discuss it. Lots of fun. Let's turn these moving averages off so you can see it's a little bit better. Turn that off. Turn off my tide. So we had our 521 cross right around where I entered my trade. I posted a short, and a lot of times when I'm trading, whether it's based off Wyckoff, based off fractals or whatever, it's always, I like to build into my trades. So we posted this short up here above. I got in at 40.42. This was 40.44 here, and we got this nice drawdown all the way down so far. I think the low here was what, 40, just about 4,400. So it's a nice $40 move. Now this could come back up in the 1 hour time frame, or it could continue to break down. But this is an area, guys, that you have to be aware of, because again, when you look at your time frames and you're looking at the 1 hour, that's when I'm entering my trades, and I zoom out to the 4 hour, because what shape could be made here on the 4 hour where you had your down thrust and Wyckoff, you could be coming back up for a double top, right? And then you zoom out to the 8 hour. So I don't just trade in a small time frame. I always want to see my patterns on larger time frames. But even here, going back to the 1 hour, if this thing on a regular volume day like Tuesday, if this thing reverses and wants to come up, it's always important to lock in any profits that you deem fit as well, or move your stop loss. That's what I always do, is just tighten my stop loss down the road. But if this thing comes up, then what you want to see is if price gets above 44.44, you want to see it hold, get your Livermore pivot, and break out to the upside. And that's my trigger if this ends up reversing to go to the upside, okay? And that's going to have to be a decent sized move. There'll be a $40 move on the S&P, $50 move to get up here. And you always got to be aware, could just be an up thrust entering the range again, because we are at a very strong resistance level of 44.15. That's that yellow line. I carry my fibs over from the larger time frames. Just how I do it. Everybody can have their own method, but the larger time frame fibs are much more important to me than the smaller time frame, and the same with the oscillators and everything else I trade with. Let's jump to Bitcoin. Bitcoin doing exactly what I want to see it do. Talking about Bitcoin, where is that target for Bitcoin? Oh, I got to show you the target real quick on the S&P if it's changed at all, right? Because I had 3141 to 3300 roughly. But guys, just doing a simple, I'll just do this quick so we can get to Bitcoin. Just doing a simple fib retracement up there to on this trend off your low. Looking at your 1618. Now remember again, never made a bottom in history, right? So assuming we take out our low here of 34.89, you're looking at 1272. There's my target of 3141 to 3300. And of course, the golden ratio would be 2900 if things got horrible. That's where it could go to. I still think you're going to have another base and rallies. And of course, price moves in waves, as you can see. So this could just be slinking down as well. But the targets haven't changed to answer your questions. So I'm still looking for that next pull down to be 3100 to 3300 roughly. And now we go back to Bitcoin. So Bitcoin, same thing, 3-day chart, guys. We have our Wyckoff here. We came to, you need fibs. When you lay out Wyckoff and price behaves as it should, you have a peak up, right? Your impulse up. This is your Livermore pivot. Okay. This is literally what it's supposed to do. It hit resistance. It pulls back. Now, Bitcoin doesn't always behave with Wyckoff. Sometimes it just pumps up way too high and you never get this pullback to the ceiling. You come back to the ceiling. Your next move is this move. And this move will either bring you out with a trigger for more upside or fail somewhere along here. This is when you add your fibs to see what you're doing. Because if you fail here in the macro sense on the 3-day chart, you're doing that. Okay, you're making a double top on top of Wyckoff. So let's do this a couple of ways here. First, let's look at our bottom. Let's take our impulse up here to our top. We fell below the 46, fell right to Wyckoff at 24,930, 618's at 24,140. So let's look at our resistance here. If we're looking at our resistance, I can just do a simple fib retracement from that peak down to the base. And I'm looking at the 786 at 29.7 and the 618 at 28.6. Let me get rid of that other fib there. Turn that one off. It's too crowded. I trade with primary, I call it the Fisher method. I trade with primary fibs when I'm looking at a lot of key areas of support and resistance. So 786, 29.7, okay? So 618 to here. So what I'm looking for to show you this with a typical ABC pattern here, okay, this is what I'm looking for. I'm looking for this. This is the pattern I'm looking for this to potentially fail here at the 618 at 28.6. Or the 786 at 29.7. Let's just draw it here. And of course, if it pivots out and doesn't fail, breaks the trigger at 31K, you could have more upside. My upside target right on the top corner here, 34,926, almost 35K. Okay, that would be your upside target, but I don't think that's what's going to happen. Bitcoin is late to the party. If it wants to rally late, great. But this is the move I'm looking for, giving you a double top, aka a dragon pattern, aka a Gartley pattern, the traditional Gartley as described in his book. And the way that I would trade this, if we come up here, if I see the markets are rolling over, and I'll be posting these trades on the Discord, right? If my confluences are met, my volume, my momentum, I would be putting my stop loss above the A point, looking for this to roll down and minimizing my risk if it does pump out. And of course, that's always the name of the game, is risk mitigation, okay? But that trigger could be for a long up here, and if it rolls over before that, my stop loss will be up here, and I'll be looking at ATR and everything like that. Playing this as a traditional Gartley pattern, looking for that descent to the downside. So what would those downside targets be? Well, again, just using this fib retracement, because we've obviously had price structure change. And you guys know I've been calling for high 12s, low 13, right? So high 12, low 13, assuming we don't get a new high here off this B to C leg. If we do keep pumping up, look where the 1618 lands you, 12,974. I've told you before, my target was 12,888 based on the previous market structure to 13.2, and now it's 12,974. So high 12s, low 13. Key thing here is taking out your low, taking out your prior low. Remember, I had called back in November, December 2021, drew that pattern when we had the new all-time high showing 10.5. And I do believe this will be another pull down with a bounce rally. Ultimately, I see Bitcoin below 10K when the economy actually, well, I guess what a better way to say it is when the people believe the economy is not getting better, it is getting worse. And especially if the Fed really does stick to their guns and do that July rate hike, if the market doesn't collapse before then. So that's something to watch. Let's look at our indicators here. MFI bouncing up off the bottom, starting to pick up a little bit in acceleration. Still a weak move, guys. I mean, your lower target here at the 46 is 27.8. Got to see what happens here, because if the markets want to continue to rally up for the S&P to reach that slightly higher target, maybe we can get some oomph in Bitcoin, get one of those nice scam wicks up before this thing looks to build a top, okay? Looking at the NASDAQ briefly, got above our 707, 15,091, the sacred slice, getting the same type of retracement here on the NASDAQ that you're getting off of the, what's it called, off of the S&P as well. NASDAQ also pushing up towards its overbought for the first time, probably since the all-time high, I'm going to guess. Yes, since the run up to the all-time high, just like the S&P. Again, expecting this to turn into a Wyckoff distribution box, either right where it is or slightly above. It's 15,544 is a 786 on that impulse move down. So it looks like this could be capping out in this area. Have to watch that as well. Mega cap tech, especially Nvidia, they're still, I mean, Apple's still strong in that area, and so is Nvidia. But looking at the Russell, guys, so small caps, the broader market, our great trade that I shared here gave 17% drop, had this in Discord as well. And then looking at our current pattern that I have here at the 1618, 1901, you're at 1872. I want to see if this comes back up and tests it again and fails. If it does and it makes some type of fractal up here, I'm going to be watching this closely and then look for this to move to the downside, because with the S&P, you've had outperformance recently with the Russell. And that's because, you had rotation in the market as well. But with the S&P, if the S&P does cap out in this area, that 4415-ish area, give or take 20, 30 points, like we talked about last video, and doesn't move up to the 4500s, you're going to see the Russell vibrate a little bit in this area too. And you already have a pattern here, a bearish pattern based off a double bottom. So, if this retests again and starts breaking down, this can be a good trade. Now, I know a lot of people think this could be a better trade because it is the small caps, right? And that is more reminiscent of the market. But this has been in a bottoming range down here. See, the S&P and the NASDAQ pump major, and this has been down here in that 1700 range. So yeah, it's a 170 point drop. It could still be a great trade and can obviously make a new low. But in my mind, the S&P and the NASDAQ have more to give up than potentially the Russell if it just falls back into this range down here, okay, and drops 100 points. Great trade, but you can't, we'll see. We'll see if it just holds that range while the other ones calm down and fall apart. But that's something I'm watching on the Russell. Tesla, I want to spend a little bit of time on here, guys. Tesla, my key level that I've been talking about, and I'll be drilling down on this in the Discord as well, and down to the 1 hour when the time comes, 268, okay? 268, our geometric Gartley reciprocal move would be your landing point. Now, for those of you at home that don't want to join our Discord for whatever reason, you just hate Discord, you do your own trading. When I talk about targets like this, 268, this, if you're in the Discord, you know this already, but this doesn't mean you hit 268 and you short it and it falls apart, okay? Because it's a target, just like up here, 1272 at 299 is a target, but you went all the way up to 315, 318. But you can see ultimately it played out and you got a massive capitulation. So you want to see some type of distribution form. You want to see your resistance hold in a range, and that is something that's very important. This is a 786 retracement off this move. This is a beautiful trade setting up here at the 268. So we'll see if we get this type of distribution box or if this turns into something that quickly moves down, like you get a spike up and then you start pulling down. Because when we shorted this at 208, shorted it right here, talked about it here on YouTube, posted the trade, 27% drop. 27% drop off our short, and that looks like small potatoes compared to what could be coming here. So let's get some targets on this. If this 268 range holds, let's get some targets on this. And I'm going to look at this, and let's just assume it gets to 268. Looking at the 1618 at 80 bucks, okay? The 1272 at 120. So that would be above your bottom at 120 or one at 90. What is that? 98? 98, low 117. Where is that candle? Right there. 101. So that'd be above 120 would be above your bottom. If you take out your low, guys, I think you're coming down between that $80 to $100 range. People don't believe it. It will happen when everything capitulates. And again, so this is a key area to watch, guys. Pay attention to that. Looking at your MFI, finally got to the trend exhaustion point. As you can see, Tesla will get up there. Big parabolic move. Finally got momentum rolling over. Looking at your volume waves, like I said, you had a nice volume move up here. You do have a gap down here too. You got a gap down here, roughly 235. You're at 260. I like this trade setup. Okay, I like this 260, and of course the upside if you break this is 0-day, 0-day options, everything. If everything starts moving this thing up, then watch that 299. But to me, again, you're starting to get some retracement. You're starting to get a Wyckoff type structure built. So 268 and slightly above, just like you've done in previous target ranges, is the area to watch this. And if you did break out to the upside, 299 would be the next key resistance level, which would just be a massive short as well. Last thing I want to cover real quick. JPN 225. Me and one of the moderators, actually, Miss B, have been tracking this closely. This is going to be setting up for some awesome trades. This finally exited its bear market. It's been in since this 1989 super bubble. Jeremy Grantham talks about it a lot. The first dual asset bubble, land and equities. It took that long to finally break out above the 89 all-time high. And as you can see on the daily, finally starting to get some type of distribution here, hovering around the 1414, 33,377. Would love to see this try to move up to the golden ratio of 1618, 34,377. So want to watch this, see if we get some breakdown here to the downside or move up to the upside. And I'll be looking at this on the smaller time frames. Got some nice vertical acceleration of the 21, looking for mean reversion trade at some point as well, which is a couple thousand points lower. So this is going to present a really nice trade as we watch it and dissect it on the Discord. All right, guys, just under 30 minutes. That's what I wanted to get into today. So hope everybody enjoyed this. See you next video. Next video will be out Thursday for another deep dive, guys. Leave your comments. I'll answer them as always. Consider checking out our room. Check out our sponsors. Have a great rest of the week, everybody.